Good morning, everyone, and welcome to the European crossover webinar. And also, happy Valentine's Day, but happy GDP Day. I've already gone and received the German GDP numbers, which have come and gone. I want to put it that way. Reuters poll was looking for 0.2. They've come up 0.3. But we also have Spanish GDP that came in. Actually, that was Spanish CPI that came in about an hour ago. But the bigger news and is going to be Eurozone GDP, which is going to be at the top of this next hour, which has kept the euro under some pressure. We had our bias chart support yesterday, our secondary support for 838, and we've come down there and we've held there, and we're still actually holding that as our support. We have a little bit lower support beyond that, but that's actually listed as our bias chart support for today. As we come into the States, we do have retail sales coming in at 8:30 Eastern, along with import prices. And at 10 a.m. Eastern, because I'm on Central Time, that's what we're saying that, but at 10 a.m. Eastern, we'll have University of Michigan numbers come in also. Yeah, let's move this out of the way. And we did go in and see U.S. equity prices again at new highs. Just going to move in as opposed to moving the charts around. Let me move that. So you can see here in Asia, we went to new all-time highs again. So what else is new? You can see here with the NASDAQ pushing hard. Obviously, the S&Ps, and they really just got up and took off in Asia. It was just like a quick jump in there, and all of a sudden, off to the races. We went up here, copping out around here at 33.87. But obviously, the NASDAQ made its own little run. And including also the Russell had gone and moved up here. All three up to new all-time highs again. So back into the FX, as I mentioned, euro still hugging near the lows, holding up just a few pips above our bias chart support of 838. Dollar index, we've made it up to this 99.11. That's been our bias chart resistance, although once we closed above, if we look here on the dollar index, once we got that close above 98.42, it's opened the door for a challenge up to 99.70. But we did think we were going to get a pause at around 99 even, 98.90 to 99 even, but we've pushed it further in. Our bias chart resistance for most of the week has been 99.10. We finally made it up there. The strength is still there. Obviously, with the euro, we have GDP at as I mentioned, the top of this next hour. Certainly going to go on, I would think, keep the euro under pressure, keep the bid up here on the cash dollar index. Dollar peso here at this support here, which comes in at 18.51. We've taken a look at that, and we'll get to that in a little while, but we certainly made it beyond 1862. There's a secondary level there, which is 1851. And dollar yen continues to hold below 110. Rather surprising, you think, if you consider where equities have gone to, and we just have not been able to trigger those stops. We'll just take a quick look at that. And you can see here, right there with 110, and we've got the stops there right here, 10.07. If we can get a daily close above, which we have been listed, I think even on a 2-hour chart, we kind of listed right here, which would be actually 10.10, but we had here at this 10.07. And despite, no matter how high equity's gone, dollar yen just simply refuses to get a foothold above 110. Rather interesting. And dollar CAD did find that support here day before yesterday at the 32.38-ish area here. And we bounced off of that, come back down a little bit. And we're just kind of mixed bagging it right here with the uh, dollar CAD. The Aussie dollar and Kiwi both took dips a little bit yesterday after finding their legs on the coronavirus concerns. So they quickly pared back a bit, although they were already very well oversold. And cable took a nice little run up here yesterday. We finally broke higher. We actually went and closed well, we got almost to our secondary support. I posted that in the room, which was 30.72. I think we got up to like 30. Let's see, was it? Well, I guess we came pretty close. 30.69. So 30.72 for that secondary resistance, and we're still close to it. Resistance isn't going to be too much higher than that it is today, and we'll get to that. With that being said, we'll just take a look at the news real quickly. Okay, Sterling consolidates gains after a change of the UK finance minister. Sterling held its recent jump on Friday as traders stuck with the view that the new British finance minister would unveil a more expansionary budget next month. With growth weak in Britain, many economists and investors want to see the UK expand fiscal spending to help weather the impact of Britain's departure from the European Union at the end of the month, at the end of last month, I should say. On Thursday, PM Boris Johnson forced the resignation of Finance Minister Sajid Javad after the latter refused to sack his advisors. He was swiftly replaced by loyalist Rishi Sunak, which investors interpreted as a move to tighten Johnson's control over the Treasury and one that would pave the way for more public spending at a March budget. Javid was regarded as a fiscal hawk. Sterling may continue to hold the line against the dollar at close to 130 and stay firm against a weaker euro after the UK government reshuffle, which may lead to greater stimulus in the next budget, analysts at Unicredit said. And expectations for a rate cut from the Bank of England before the end of 2021 have all but evaporated. Money markets are now pricing in a full 25 basis point cut, but not before December of 2021. And euro skids to new lows ahead of GDP data, and the dollar shines. The euro eased to another near three-year low on Friday as investors worried about the slowing growth momentum in the Eurozone ahead of the estimate of its economy performed in the fourth quarter. The European single currency has lost 1% so far this week and is on track for its worst two-week performance since 2018. Fourth quarter GDP is due at 110 GMT. Economists polled by Reuters expect the first percent or 1/10% quarter-on-quarter growth, the same as the previous 3-month period. The bearish trend on the euro dollar may continue today as growth data of the Eurozone are quite unlikely to improve the grim economic outlook for the area. At this stage, with worries about the negative impacts of coronavirus on the Eurozone economy, even more better than expected data may not be enough to trigger an inversion in the bearish euro trend. The fall to 827 overnight before settling at 841, down marginally on the day. The single currency has been buffeted by the strengths of slowdown in the powerhouse Germany and ongoing demand for dollars against the Swiss franc, and the euro weakened to another 4.5-year low of 1.06 francs. Concerns about the extent of coronavirus in China after the officials in Hubei announced a sharp increase in new infections and deaths has kept the safe haven yen and the dollar well supported. Uncertainty about the real extent of the epidemic is likely to discourage investors from taking on excessive risk, and there's sufficient evidence that its spread has slowed. There is a return of risk aversion, so the yen and the other safe haven assets have risen, but reaction so far has been temporary and limited, said Masafumi Yamamoto. Sterling consolidated its gains around the 30.60 mark after jumping on Thursday. when the announcement of the new British finance minister, an ultra loyalist to PM Johnson, raised expectations of the upcoming budget would increase public spending to boost the economy. So with that, we'll go on and get started with the analysis. I guess it didn't update from here, but we had indicated here that ahead of the GDP, and we had that for that secondary support of 838, but we had updated for that from yesterday, but I guess it didn't save it on this blurb here. But you can see here that we had made it down to that 838, which wasn't marked off here, but if you look here, let's pair this back even further. The 838 comes in right there. And you can see that we've continued to go and hold in that area. We did dip below 838. I mean, but we have some additional support here at 803. That would be the concern, is that and why the euro has continued to remain weak. You know, as we moved lower yesterday, there wasn't even a respite, and we figured that would stay near those lows because of the concerns that we'd get a weak GDP. This secondary area here, and you can see that clearly. The 803 right here. 838 is still going to be our support here. Bear with me. There we go. And it would be 03 as a, I don't want to call it a backup, but if we were to get disappointing news, it could break as low. But I still like that 838 area here. We are holding above it. Bear with me. There we go. And actually, I can check the ForexAnalytix page. Okay, there we go. And it does say here, the euro continues to slide. The pair pause at the secondary support of 838, but pressure remains with Friday's Eurozone GDP. Friday support levels are at 838, followed by 803. Resistance will be 882, followed by 905. So if for some reason we were to go on and get a jump, then we would be looking for resistance to be at 882. There we go. If we were to see that run up here, probably not expected, but I mean, as far as going to 9, but if for some reason we get to potential, like I said, we're not that far away from 882, but if we would be able to get clip beyond that, we'd be looking all the way up to 905. Price will stop soon, but we shall see. Moving on to cable. Cable awoke on Thursday, reaching secondary resistance at 30.72. Well, we came up just a little bit shy. High was 30.69. Friday's resistance will be 30.85. Beyond that level would be 31.25. And support's going to be 30.18. Well, we thought they might be able to kick it up a little bit further. may not be the case, but we'd be looking at 30.85 for our resistance. And support 30.18. Once again, I got to imagine the bulls are, I won't call them bulls actually, but I'm just saying, is any up moves here going to be looked at with a wary eye after, I mean, maybe we can push up a little bit higher to push the stops, but I don't think anybody's getting bullish on this cable after what's happened the last 3 weeks. So the Aussie was placed on his back foot with additional coronavirus concerns on Thursday. Okay, we had just barely gotten a little bit of a steady climb here, and then we get pushed back yesterday on those concerns. But Friday support will be 66.78 with resistance at 67.62, and that would not be that. That would be right there. Bear with me, which would be 65.78. That was right, 66.78. With the resistance coming in at 67.62, and that is correct, 67.62. Tightening up rather a bit. But we've had 3 days of recovery here, and like I said, we turned around and we got those coronavirus concerns in the U.S. session, early in the U.S. session, saw the Aussie quickly slip back. Certainly looked like it was had the potential yesterday to go and brush even further higher, all the way up here to 67.62. Could not go on and do that here. So we slid back, and that's going to be our resistance for day, 67.62. Concerns in case we do go on and slip back here. Is going to be at 66.78 right there. Let's go move into the Kiwi. Kiwi paired back on Thursday, same as the Aussie on the coronavirus impact. Support going into Friday will be 64.02. We've actually already gone and dip. But it's still going to be holding up there at 64.02 with resistance at 64.93 if we were to break higher, and that would be that challenge up here, which was that key area, but also was the breakout before we took off. So I don't know if we'll be that ambitious to make it up to 64.93, but that's going to be our resistance, and support will be 64.02. And that will remain the same. The way things are standing now, it almost seems like I don't expect to see too much movement here between the Aussie and the Kiwi. And take a look here at the dollar CAD. We had paired back a couple of days ago. into that area at 32, 38-ish. And we've kind of held our own. We tried to push up a little bit higher yesterday, but not a whole lot of movement, since yesterday. But the dollar CAD picked itself off the most recent low, tagging the 32.69 level on the snapback, if you want to call it. Wasn't a whole lot of a snapback. Resistance on Friday will be 32.84, and support will be 32.30. So giving a little bit of leeway here. 32.30 if they want to dip back, which would take out the most recent lows. Not expecting a whole lot of movement today on this. And on the upside, we're allowed it to press up a little bit higher on the strength of the dollar also. Maybe see a little bit further extra push. But on most of these pairs, I'm not expecting a whole lot of movement here. And that's a bit of a disappointment here. We'd like to see more intraday movement here to spark some more action here. Well, as you can see here with the peso, we have gone and slid a bit further back here. We have been holding here at this 1862, well, it's 1865, but the 1862 is 161% of this most recent failed rally right here, okay? We've been actually holding up rather well. Still, we've dipped below, and now we're into the 50s. We have a secondary level here at 1851 here, which we've marked from before, and coming in right there at 1851. And that's going to be our support for today. Potentially, this thing could break down lower to 1844. But I'll tell you what, it has held up very well in light of the continued ascent of U.S. equities. So at least for today, it's going to be 1851. 1844 certainly is a possibility, and God, you'd have to think these equities seem like they're going to the moon. But we'll go with the 1851 for today's bias chart support. Resistance for today. You can see here, just right at the highs from yesterday, which is going to be 1866. We can actually push it just a little bit lower. It's called right there, 1868. If we were to get a little bit of a flush, I doubt we do, but that'd be a flush higher, 1868. And with that, let's go move into the peso. Well, as we mentioned earlier, despite the run up in equities, we have not been able to get above 110. Some thoughts may be, well, you still have a bit of that safe haven buying in regards to the coronavirus. But even with that, I'm surprised we have not been able to at least trigger the stops and push beyond that, maybe pare back. So until we do that, we still haven't done it. It sounds a little bit odd, but it's true. Until it happens, it hasn't happened. So meaning the resistance is still going to remain the same, which is going to be 1010. Do have 1007, but we're allowing for a little bit of an extra move there. You can see that coming in there for 1010. And if we get a daily close above 1010, that really opens the door for a quick run up to 1052, which isn't saying a whole lot. Doesn't mean it can't go much higher, but I'm just saying it allows immediate run up there to 1052. Support in the meantime is going to remain the same, which is 964, which is an old breakout area from this last prior run up here. So that'll still remain the same. No changes. Well, looking at the cash dollar index, we mentioned that earlier. This market continues to move higher. Dollar index closed at its resistance level of 99.11. Intermediate target remains 99.70. We talked about that. If the market could get a daily close of 98.52, which it eventually did, then it would open the door for a move to 99.70. And boy, that thing still looks on track. Friday's resistance, though, is going to be this 99.44. You can see that there, with support at 98.67. You can make the case right here, right there. You see that? There's that 99.11 we've been looking at, that they can just kind of stymie there. Obviously, a lot of it's going to have to do with what's going on with the two events, Eurozone GDP, as well as retail sales, but hard to deny the strength. But so our resistance, if we go on and blow much higher, is going to be 99.44. And support will be 98.67. And with that, we'll go and move on to the cross rates. Well, we did go in and see that dip back yesterday with the coronavirus concerns, and we're just kind of spinning our tires right now. We're just really, truly stuck in neutral. Look at this small, tight range here. And the market's just not sure what to do as we close out the week. Not that these 2 days were very big at all, and we've had basically a spinning top here, and then we roll back down. The ranges have still been relatively tight. So looking and keeping in line with that of a tight day, you see coming across here, that's going to be our support here, right there, which would be 70.42. Upside right there is going to be right there, 71.02. And moving on to the euro yen. Well, the potential is we can move a little bit lower in regards to that GDP is going to come out at the top of the hour. We're actually going to go in and go with support, which comes in right there. You see this nick here, and that comes across with these highs too also. So we'll go right there with support 18.57, which is still a pretty good pullback. Let's go on and see if we can take a look at something a little bit closer on the 2-hour chart. $18.77. It's a pretty good little dip here. Right there, coming across here, 1884. 1884. That's a bit closer as far as we're looking as far as the risk for a move lower. Boy, this is a tight range. That is one heck of a tight range. Well, it's just going to be right here, the lows here in that target, which is 1932. And actually, if you're looking here, it's here where they would need to break, coming right there, right across there. So if they do make a run up here, that's where your initial line of resistance is going to go with, which is going to be 1943. It's about 33 pips higher. This market has been very quiet. Let's go move on to the Euro odd. And resistance would come in right there at 62.07. Seems a bit of a far fetch. I mean, but we did go in and get the market to close almost looks like a long-legged doji here. We closed about halfway into this range. If we do see a little bit of a spike up, maybe some euro recovery off of the Eurozone GDP would be 62.07. Well, you can see here clearly where the support comes in right there, this level here, which is 60.91. And we did tag that yesterday and just about almost hit it today, 60.91. And we'll move on to the Euro Kiwi. Same thing, rather tight here. This market's already gotten beat up pretty good. I mean, what a fall. See, they expected the potential for us to rally up here, and it's going to be right here, this high. That will be resistance, which would take out yesterday's high, which would come in at 69.21. Already had a pretty good shellacking yesterday, or actually day before yesterday. Support's going to come in right here, 68.04. Not that far away. I mean, still a good 40 pips away. If we do see further euro weakness on the GDP, but we shall see. 68.04 that'll come in already listed there. Will remain the same. And to go to the ASEAN, well, this thing has just continued to remain weak. I don't even know why we don't even need this here. It's pretty clear as a bell. Let's remove that. And once again, today, I'm not expecting a whole lot of movement. We've been trading a fairly tight trading range here, to say the least. Resistance, if we push up a little bit higher, is going to come in there at 74.16. So we trade on either side of this key level. 74.16 with support coming in just a bit lower here. You can see the low here and the high here. That's what they'd look for, which would be 73.42. 73.42 on the downside. $74.16. Now let's go into the guppy. Well, we've been on a little bit of an ascent here. One of the things we talked about is this market has been just quiet, not a whole lot of activity after we've seen, a good strong move to the downside. Boy, one heck of a move to the downside. Then a nice rebound, a pullback, a nice rebound, kind of stayed ourselves, and then we started to take off, and now we're just kind of stuck in the mud. Doors open for starting to still advance. 43.81 almost seems a bit of a stretch, but it is at the end of the week. We'll see if we can find something a little bit closer on the 2-hour chart. Right there. Right there. 43.57 seems a little bit more reasonable on the upside. And on the downside, right there, 42.77. And lastly, with the sterling odd, well, we did go on and break out of this little triangle that we had from yesterday's European session. Not that far away from here. So we're going to go with this area here, which let's take a look at this on a 2-hour chart. We did seem to kind of run out of gas here. And that is a decent resistance there. So let's stick with that, 94.20. And on the upside, on the pullback, if we do slide back, actually going to go right there with these two little highs touching, which is 93.17. 93.17. Beautiful pullback. You can see a little bit more volume trading right there. It's going to be 93.29. With that, we'll just take a real quick look at the gold market. I may look to start to go back into this market, at least from a day trading point of view. Yesterday, we weren't able to get above that, which was on the 2-hour chart. If we were able to close above 1580, that opened the door for us to make a quick move to share that in the room, which was going to be 1591. If we could have gone and made that move, we didn't make it in Asian session. We took a quick little dip here, as I showed you where equities took off in Asia. Quickly took a quick dip there. Take a look here on a 30-minute here. And you can see as they fell apart from this 1580, They quickly took a dip down here to this 1576. We've rebounded. We're actually challenging close to those same levels here. And you can see right there some decent movement, but I think it's a day trading vehicle. It's not a bad market. But we did get this. We can see here when we rolled over, it went straight for this 1576. We didn't quite make it at the 1576, but it was a decent move as they came apart. And then you can see here kind of somewhat jagged in a way. I mean, this is a 30-minute chart, and you're not seeing those good rotations. That was the only thing, is that if you hold it, we do make some moves, but you can see here we get kind of deathly quiet, nothing happening. But I can't, you know what? I think it's really more or less where we're at now, and the market's not sure what to go and do, because we're kind of seeing the same thing today with the crude oil market. Get rid of this, and boy, we're stuck. Yesterday, boy, we saw actually from Asian session the day before, not yesterday, but the day before, the Asian session rolling into yesterday, we saw a heck of a movements here in the crude oil market. Very good movement. Boy, did we look at this. Boy, we came, made some kind of movements there. If you can see here, where we turned around, remember we opened up around, we made a run after they opened up early Asia towards 52, and then we quickly came apart, made another dip, rallied back, saw some pretty good movement. Now we've gone very quiet. I mean, exceptionally quiet here in the up here. The good thing is, I won't say good thing is, but if you look at it from a context point of view, you can see here that earlier this week we did go sub 50, and we're still trying to hold it. It certainly looked like on Wednesday we were going to make a move Wednesday into the Asia, which would be Thursday Asia, towards this 52.62, but then the bottom came out with all these coronavirus scares, really took a dip here. But if you look at it from daily, they're still trying to make a stand here. So you have to look at this and thinking that they can still try and push a little bit higher. And with that being said, you can see here that even though we saw that wild action yesterday, well, actually from Asia of the night before, rolling into yesterday into the States, a nice rebound, and then we've been stuck in this area, and we're not doing a whole lot of anything right now with the crude oil market. Still, the risk is that we can go in and punch up above here, but and we've seen. I try not to stick too much with any kind of fundamental data other than just some news headlines that may just for the momentarily jerk the market around. But we saw the EIA statistics come out yesterday, actually in Europe, and it was showing that the lowest demand that we're going to see in a decade. So I thought we would have seen still further downside action when we came into the States. And we did initially, but then we saw this, the doggone spoos push this market. I was actually short at the time, really pushed us up in here. And I got stopped out of a part of my position, but I immediately put it back on, and we were able to dip lower. And after that, I didn't want to do anything with it, although we did move around a little bit yesterday, and then we kind of just gone dead. And I think that's what the market's trying to figure out what to do, because if you look at it in context, what it's trying to do, it's trying to put in a bottom for the, which may go on and last a little bit further. The market is very, very oversold. So you can see here, we just don't have any action that we're seeing since overnight, since the close of the U.S. session. And even before the close, the market had kind of gone a little bit dead here, and not really a whole lot of action happening here at this time. We'll see what happens also with, I mentioned the gold market, certainly have come right back here after taking that dip in Asia, and it jumped right back up here at the 1580 here. But you can see here, this market, it just sits there for a long time. It's almost like if you get a move here, you can go with that move, but you can see here, it's just like, not a whole lot of back and forth activity here, not the kind of rotations that we do see in crude oil. That's all that we have for today. Thanks for joining us here on the European crossover webinar, and good luck trading. Eurozone GDP at the top of the hour.